In this video, I'd like to discuss a very important distinction between accounting profit and economic profit. Why in economics we are concerned with the concept of economic profit instead of the regular accounting profit that we all are familiar with. So let's get started. Accounting profit has to do with the difference between the total revenue that we make as a firm and the explicit costs. And by explicit costs, if you recall from the previous video, those are the actual payments that we incur explicitly. So that's the accounting profit. When it comes to the economic profit, notice that the difference is that we subtract from the total revenue the explicit costs and together with implicit costs. So this is the difference, okay? We also consider the implicit costs. Now, let's open this bracket and see what actually economic profit is. If we open the bracket, we get total revenue minus explicit cost minus implicit cost, and I wrote them over here. Do you notice that total revenue minus explicit costs are the same as accounting profit? So therefore, this thing is going to be the accounting profit, okay, minus the implicit cost, and the implicit cost is the opportunity cost of the resources owned by the firm that could be used elsewhere. Now, with that being said, I would like to show you with an example how useful this concept is. So let's do that. For instance, consider that we are a business, okay, or consider that we have a firm that makes $100,000 in total revenue per year. So that's going to be $100,000 in total revenue. And the total costs, explicit costs, okay, I'm going to write here explicit costs, are $50,000. Those are the wages and let's say the building that we have to run our business. The difference between them, accounting profit, the difference between them is going to be $100,000 minus $50,000, which gives us a $50,000 accounting profit. Now, suppose that instead of running this business, me as an entrepreneur, I could have a job that pays $60,000 a year. So the entrepreneur could have $60,000 a year, okay? What is the $60,000? This is the implicit cost. This is the opportunity cost that the entrepreneur gives up in order to run the business. This is the labor resources that the entrepreneur could use to generate income. Instead, he or she decides to use it in the firm. So therefore, the alternative job, okay, the alternative job is going to be the same as the implicit cost in our case, and that's $60,000 in our example. With that being said, let's put everything together and calculate the economic profit. The economic profit is the difference between the accounting profit and the implicit cost. The accounting profit is over here, $50,000, and the implicit cost is $60,000. So that means the economic profit is equal to the difference between $50,000 minus $60,000, and that is minus $10,000. Now, what does it tell us? Minus $10,000 does not mean that we are not making money in the business. That's accounting profit. All the economic profit does is it compares the income, the benefit of one option with the benefit of the next best alternative. So when we say that the economic profit is minus $10,000, what we're saying is that our implicit cost, our opportunity cost, our next best alternative is actually better than running the business. The business is profitable. It's $50,000 a year. But this is not the best option we could take because we have a better option that pays $60,000 a year. So the economic profit considers the comparison between our current option, our current decision, and the next best decision. And as a result, we can see whether we're making the right decision or not. So even though this entrepreneur makes money, that entrepreneur is better off financially taking the job instead. And that's where the concept of economic profit comes into play. It teaches you to think from a big picture standpoint, to consider your alternatives instead of looking just what you have in front of you. Hope this all makes sense. I appreciate you all watching. If you like the video, please make sure to subscribe, and we are done.